Right. Welcome everyone to another episode of Daily Rates Live with the Mortgage Calculator. My name is Kershey. I'm the president. We are a lender licensed in over 20 states, and we have over 200 loan officers that would be happy to send any downs for the examples that we're going to go over today. But what we do every day is we'll go over our standard rate options for our standard loan programs. We have over 5,000 loan program options between all our different programs. But we'll go over our most common options, and then we'll do a deep dive. Today we're going to be comparing FHA to conventional, why we would use one versus another. And I have a couple specific examples pulled up for today. So thanks everyone for joining us. Let me go ahead and switch my screen. Start looking at the market for today. All right, so usually what we want to start with here, just adjust the screen size a little bit. Oops. There we go. We always want to start with the 10-year Treasury. Typically, that's the best indicator of rates overall, especially when we're comparing different programs, non-QM, commercial, conventional, all the different options. We want to typically make sure that we have a general review of the rates here. So in the last 5 days, it's gone up a little bit with some of the news, but we always want to pull this out to 1 year to make sure we're looking at the overall perspective. And you can see we're pretty much still at 1 year lows here. So in general, it's definitely still a good time overall for all our different rate programs. And now let's get into our actual live rates for today. So to compare across all our standard programs, we always set up a basic scenario: a single family home, 500,000 purchase, 300,000 loan amount, to 60% loan to value, 760 FICO credit score, 40% debt to income. That way we can see the best rate options across all the different programs. And our first option here, we always compare our conventional primary, our conforming loans, typically what most people think of when they think of a mortgage, rates as low as 5.875, final APR 6.123. And if our customer doesn't qualify for conventional for any reason, or in our example for today wants to compare conventional, we typically want to look at FHA next. FHA allows a little more leniency on credit issues and a higher debt to income ratio, but does require upfront and yearly mortgage insurance, which is one of the things we'll look at today. So FHA comes in at 5.25 rate, but with all the fees included, final APR comes in at 6.129. That's why we always want to compare the APR. If our customer qualifies for VA programs, our eligible vets, active service members, and surviving spouses, these programs are amazing. Rates today come in as low as 5.375. With the much lower fees here for VA, final APR 5.615, much better than any of the other options. So typically the best option for our eligible borrowers. And moving on to USDA, that's for properties in USDA eligible areas. That's typically the rural areas of the country. Rates today come in at 5.125, final APR 5.802 with all the fees included. So typically our customer that may be shopping in this area and does qualify for the income limits, we'll be comparing this to FHA and conventional. And USDA is a touch cheaper today. And we love our non-QM programs here at the Mortgage Calculator. This is where we have tons of different options. So non-QM allows us to use alternative docs. Customer doesn't qualify for conventional, FHA, or any of the other standard options. And especially our self-employed borrowers, we may need to use alternative documentation, such as bank statements, 1099, statements, etc. So typically our customer may not qualify for conventional and may have to switch to our alt doc option, but rates today almost identical, 6% rate, final APR 0.272. So very comparable there to conventional and even FHA in our example here. And we can use alt docs for our investment properties as well. They come in at 6.125, final APR 6.448 to use alternative docs to purchase an investment property there. And we'll compare that to our conventional options for an investment property coming in today. Again, same rate, 6.125, final APR 6.438, just a touch cheaper to use our conventional option. And our favorite programs here, or at least my personal favorite, are DSCR, no income or employment needed, just need the estimated rents from the property to determine the DSCR ratio, stands for debt service coverage ratio. If the estimated rents can cover the expenses, that means the ratio is 1.00 or higher, which is what we use for this example here, aka the property cash flows. And this example has a 3-year prepayment penalty, which is standard for these programs. 5.999 rate today. Final APR 6.222. Beating conventional, beating alt doc, absolutely amazing. And we can add a 5-year prepay to sweeten the deal. Rates come in today as low as 5.875. Final APR 6.193. Again, beating all the other options. Our DSCR is amazing. And we do have our DSCR option as well with no prepayment penalty. Some states don't allow it, and some borrowers don't want to have a prepayment penalty. No problem. Rate today 6.125. Final APR 6.448. So just a touch higher than conventional there to have no prepayment penalty. Again, pretty amazing to use. No income or employment info. We also have our second mortgages and tons of other programs. So please get with our team members if you'd like a full itemized loan estimate for any of our options here. But let's get into a deep dive today. And we're going to be comparing our conventional to FHA. You hear me talk about this every day in our first two examples, but we're going to go over the actual reason why we would want to use one versus the other. So first thing we have here is our example property. So here we have just a standard home here in the area where I'm at, and price here, just standard single family home. So we can set up our basic scenario. So what I actually set up is a 575 purchase price. Maybe we got it down a little bit here. But first, let's look at our FHA. So FHA, our borrowers will typically want to put the 3.5% minimum down payment. And this is that exact home we just looked at. And you can see here in the notes, I put this is our most common request. And what we did here is we set it to a 620 FICO credit score so that we can compare to conventional. So conventional typically has a minimum of 620 FICO credit score. And we're typically going to see the biggest difference here when we have a lower score and we're looking to compare FHA versus conventional. So since FHA has a standard set rate of 0.55% for the MI, it's going to equal only $254 per month in this scenario. So here we have our standard FHA rate choices here. We even have an option with some lender credit as low as 5.625 here, costing 1.611. And we have our option for some lender credits here, 6.625 rate towards a little bit of lender credit here, 0.273 towards our closing costs. So again, the scenario here was the down payment was the standard minimum, the purchase price I mentioned before for that exact property. This 620 FICO score allows us to get $254 monthly mortgage insurance in this scenario. And that is added here to the payment. You see the monthly payment with MI. So we have a pretty standard lowest payment option here of $3,504 a month. Now, when we switch to conventional, the credit score, instead of having a set rate for MI coverage, the conventional ones, we have private mortgage insurance, meaning it's rated and it's quoted based on the credit score. So since 620 is typically the minimum, this is going to be the highest cost that we see on our PMI. So here with our conventional, we use 3.5% down payment. That's only possible for first-time home buyers, just so everybody knows. I put first home buyer here in this example. So we could compare apples to apples, same down payment, same everything. And with the 620 credit score and a standard MI at 620, you can see here, I didn't want to blow it in the start. You can see here our rates as low as 6.5, and we have a par rate of 6.99. So the rates are a little bit higher. But the MI here, let me scroll down, comes in at a pretty whopping $1,200 a month here for the PMI. So this is where you see a big difference. This is probably the highest cost PMI we could quote. I did run scenarios and it didn't even qualify. I had to lower the DTI in order to even get a quote. So these are maxing out the PMI limits here. And of course, we do have some options that some of our lender options to have reduced PMI when we do order the PMI through them. So this isn't the end all be all, but I wanted to provide a great example. So you see here with almost $1,000 more per month, our payment, our lowest payment option for conventional for our low FICO borrower in this instance is going to be $4,646. And when we switch back over to FHA, $3,504. So big difference there in the monthly payment. Obviously, that's going to affect the qualifications as well. So you see here, we typically want to use FHA when we can, when it's possible, of course, and typically it's the more lenient option when our borrower typically has a lower credit profile. And remember, when you see our live rate examples that we go over, it doesn't make that big of a difference here because our higher credit borrowers with a 760 FICO in these examples, there isn't that much of a difference between the conventional and FHA, but a very drastic difference when we have a lower FICO borrower. Definitely want to try to switch to FHA. That borrower over $1,000 per month on their monthly payment. Definitely probably help that family a whole lot. So that's our specific example for today. Let's see if we have any questions. If you have any questions, please drop them in the chat there. And of course, if you would like a full itemized loan estimate, we have over 100 licensed loan officers that would be happy to get that out for you and get you a full itemized breakdown for any of our loan programs. We have thousands of loan program options. So I don't see any questions for today. I'll go ahead and wrap it up. We'll be back later this week. Happy holidays, everyone. And we'll be looking at some more live rates here soon. Thanks.